My name is Randi Abernethy. I'm head of clearing and group risk at Bullish, a publicly traded digital asset firm listed on the New York Stock Exchange, just a short walk from here. I've spent my career in clearing and risk management for regulated market infrastructure at LCH, at Barclays, and at Nodal Exchange before joining Bullish. Let me tell you briefly who we are. Bullish is an institutionally focused digital asset platform. Our chief executive, Tom Farley, ran the New York Stock Exchange, and we built Bullish deliberately to look and operate like the regulated exchanges and clearinghouses that made American markets the envy of the world. Because the United States had no federal framework, we built under regulators abroad, in Germany, Hong Kong, and Gibraltar. But when American regulators opened a door, we walked through it. Last September, New York's Department of Financial Services licensed us to serve U.S. customers, and we are now working with the CFTC and NFA on the registrations needed to operate a federally regulated exchange, clearinghouse, and intermediary. We are not asking to operate in the shadows. We are asking for a rule book, and we intend to build under it. That is why the Clarity Act matters. 1 year ago today, the House passed it, 294 to 134, with strong bipartisan support. By drawing a clear line between the SEC and the CFTC, it gives responsible firms what they've asked for over a decade of uncertainty while capital and innovation moved offshore. And I want to be direct. Regulatory clarity is not a favor to industry. It is how Congress brings this activity onshore under American regulators with American investor protections. From where I sit, running clearing and risk, that's the heart of it. The failures that hurt investors, most notably FTX, happened offshore, beyond the reach of any American regulator. Under this framework, registered exchanges would live under the disciplines that have protected investors for generations: segregated customer assets, capital requirements, surveillance, and federal examination. Bullish follows these principles voluntarily today. We are eager for oversight that makes them mandatory for everyone. As the Senate takes up its bill, I want to focus on one detail that matters enormously in practice: the treatment of exchange affiliates. While early drafts would have flatly banned affiliates of an exchange from trading on it, we have appreciated that Senate leaders have shown a willingness to align itself with the House version of the bill, which instead permitted affiliate activity subject to guardrails. That's the right answer, and for 3 reasons. First, affiliate trading is not some novel feature of crypto. It's common and often necessary in the very markets this legislation uses as its model. Futures exchanges clear through affiliated clearinghouses. Clearinghouses trade for their own account to manage defaults and correct errors. Exchanges rely on affiliates to provide liquidity in new markets until independent market makers arrive. And the SEC expressly permits a broker-dealer running an alternative trading system to trade on its own platform. If a ban were necessary to protect investors, our securities and futures markets wouldn't be built the way they are. Second, these structures are safe because they come with guardrails that work: strict segregation of customer assets, conflict of interest management, disclosure, and anti-manipulation enforcement. The Clarity Act applies that same proven architecture to digital assets. Third, FTX is invoked in this debate, and invoked incorrectly. FTX did not fail because affiliates traded on it. FTX was an unregulated offshore exchange whose affiliate misappropriated customer assets, deploying them largely on other unaffiliated venues. A trading ban would not have stopped that. Every element of that conduct was already illegal for registered firms. In fact, the one piece of FTX that survived was LedgerX, its CFTC-regulated exchange and clearinghouse, precisely because it was under federal supervision. Not a dollar of customer assets were lost there. The lesson of FTX is not to ban practices regulated markets have used safely for decades. The lesson is to bring these markets inside the federal perimeter, which is exactly what this bill does. Bullish is the kind of company this legislation is designed to reach, and we want to build the future of finance here, in America, under American rules. I encourage Congress to finish the job and get the details right. Thank you, and I look forward to your questions.